Recording. Awesome. And I will ask Pastor Jones, if you'd be so kind to kick us off, I'd appreciate it.
Good afternoon, everyone. Please make sure your phone is on mute. And Sister Carol, as you see persons who need to be muted for as long as your host, if you would go ahead and take care of that, that would be most appreciated. Brother Herman Palmer talked about being in the backyard at the barbecue. So I'm Cedric Hughes Jones, Jr., the pastor of the Mount Zion Baptist Church of Philadelphia. I'm often called upon to say words in moments like these at the family barbecue. So consider me today trying to avoid that role when everybody groans when they say, oh, he's blessing the food. We got to wait for 20 minutes for us to finally eat. So I am cognizant of that and trying not to do that. So my role today is to welcome you on behalf of the Mount Zion Baptist Church of Philadelphia, 50th Street and Woodland Avenue, one of the groupings that got us started together as we began this work together. It is a collective work. It is open to everyone. And I think it particularly pertinent on this day to be talking about wills and estate planning. It is the Friday before Mother's Day. I'll make this a bit personal for me. My mother, who was born in 1928 as the youngest daughter in the family of sharecroppers whose father died when she was 5 years old. Before she died, she'd tell the story, she was barefoot and didn't have a first pair of shoes until she was about 5 years old or so. With that said, my mother, perhaps like your mother, your grandmother, your grandfather, you, whatever the case may be, made a great leap from the kind of poverty, whatever your narrative is, whether immigrant or African-American or otherwise. Just this notion of how far my own mother went is personal and significant for me. And with every phone on mute, please, it is timely to me that we would be talking about wills and estate planning, because I think there is a notion of honoring father and mother that most of us know biblically, regardless of your tradition or even your faith. There's a recognition of honoring your father and mother. And I wish to say, and perhaps frame our conversation today with this thought: you honor your legacy and your mother and your father by taking care of what the Lord has blessed you with. If you were blessed to have a mother like mine, who was sensitive and thoughtful about these things were in place when she died last February. And to God be the glory. And I'm thankful for her and my father. I say that so that the testimony will be, when you close your eyes, you have put things in such a place that the pastor or imam or whomever is doing the final rites is not dealing with people fighting over assets that could have been spelled out, that persons are not losing money to the state that would be in probate, that would be better off in the family's hands. So I hope that on this Mother's Day that you'll link today on Friday, the session on wills and estate planning, with your celebration of your mother and grandmother. Happy Mother's Day to all who are here. Whether your mother or grandmother is alive or has gone on, they left you a legacy of faith, hope, love, more than likely. And they probably left you something. And I hope and pray that you will look at our time together as assisting you to honor your mother this weekend with the legacy that you've been bequeathed, and to make sure that when you close your eyes, that folks will say, thank God for mama, thank God for daddy, thank God for grandmama, thank God for granddaddy, because they thought enough of us to bequeath something to the generations to come, which is fundamentally biblical. Welcome to today's session on wills and estate planning. At the outset, I said that there was a team of us doing it. I'm delighted that the second church that joined us in this effort was the Enon Tabernacle Baptist Church. Brother Alan Waller is the senior pastor, and Brother Pastor Kevin Murphy is leading this effort on behalf of Enon, and I transfer it over to you, Brother Murphy.
Good afternoon. Thank you so much, Pastor. Appreciate you so much and echo all of the sentiments that you've laid out and the purpose for today. I do bring you greetings on behalf of the Enon Tabernacle Baptist Church and our senior pastor, Reverend Dr. Alan E. Waller, and I am honored that I have the privilege, the honor, as well as the responsibility to be a part of this faith-based alliance to help share financial literacy to our communities this vital information that can change the course of people's lives. And as we say, your legacy and you being here today is a tribute to your legacy and for the outlook that you have for your family going forward. So again, I just say welcome to this workshop today. I have my pen and my pad, and I am looking forward to this wonderful presentation by Sister Amy Griffin. And with that, again, I just say welcome and happy Mother's Day to all. And with that, I will turn it over to another one of our team members, Sister Latanya Gonzalez.
Thank you so much to both of our founding pastors. I'm so humbled to be here with you and all of our guests from all congregations and the Freddie Mac Borrower Help Centers as we expand wealth building for the communities we serve. I'm a housing outreach manager at Freddie Mac, a secondary mortgage company that purchases loans from the primary market of banks and credit unions to expand their ability to lend more to consumers. What people don't know is that Freddie Mac also provides free financial literacy tools in the form of Credit Smart, created in conjunction with 5 historically Black colleges and universities. As part of Freddie Mac's wealth building strategy, our goal is to help families obtain homeownership education to protect their homes and today learn how to properly pass wealth to future generations. We have joined with churches and community partners such as the National Foundation of Credit Counselors and Diversified Resource Network to help close the wealth gap. At this time, I'm going to turn it over to Cora Fulmore, the founder of Diversified Resource Network.
Thank you so much, Latanya, and thank you to all the pastors and our guest speaker. I'm so excited about tonight's presentation. We've got a lot of great information that we're going to share about getting your financial house in order. There's so many things that we have to be mindful of. I am so excited about being a part of this team, and I can't do anything but encourage all of you that are on the call to please take note. I've got my pad and paper handy with my pen. I'm ready to go. I can't wait to hear what Amy has to share. Thank you so much, Pastor Cedric, Pastor Kevin, and Herman for bringing all of this to us. At this point, on behalf of Diversified Resource Network, I'm going to turn it back over to Herman, I believe, right? Is it Herman?
Correct. You are correct.
Okay, go ahead, Herman.
Thank you so much, Cora. I appreciate you. And good afternoon, everyone. As you've heard, my name is Herman Palmer. I'm the Vice President of Housing for the National Foundation of Credit Counseling. To help familiarize you with my organization, the National Foundation for Credit Counseling, or NFCC, was founded in 1951. We are the nation's first and largest nonprofit dedicated to improving people's financial well-being. Our mission is to lead the country's nonprofit financial counseling industry and our member agencies in their work to empower consumers to address their financial challenges and take charge of their futures. We have a nationwide network across all 50 states and US territories. Our certified counselors are financial advocates who work to empower millions to take charge of their finances. Who we help? We work with multicultural and underserved communities, single moms who are head of household, small business owners, military families and veterans, and student loan borrowers. That's who we are. Now I want to talk about this evening's presentation. The purpose of this presentation and this series of which it is a part is to empower communities by providing them with the knowledge, skills, and resources necessary to achieve sustainable financial independence now and in the future. So many times when it comes to financial matters, we, and I count myself in that, allow ourselves to be intimidated or overcome by what we don't know. We've all heard the saying, knowledge is power. Well, if knowledge is power, knowledge over our financial matters is superpower, and we are here to get you powered up. Before we begin, I want to cover some housekeeping. We ask that you hold your questions until the end of the presentation, at which point we will have a question and answer period. If you like, please feel free to write your questions in the chat box. We will record them and share them during the Q&A period. Here's the thing, and it's very, very important. I want you to know there are no stupid questions. Far too often, there's a question that is important, but the person is too embarrassed to ask, not realizing that there are several people who have the same question. And because they didn't ask, nobody gets the answer they want. So please, do not be afraid to ask questions. It is why we're here, to get you the answers you're looking for. And now, it is my pleasure to introduce this evening's presenter, Amy Griffin, who is the founder of the Association of Black Estate Planning Professionals, Inc. This collaborative nonprofit has 15 strategic partners committed to bridging the racial gap. We are better together. Amy is the principal of the Life and Legacy Counselors of the Griffin Firm, an estate planning firm that seeks to educate and facilitate the creation, protection, and transfer of wealth. The Life and Legacy Counselors stand on the core values of FIRST, F-E-R-S-T, faith, excellence, relationships, service, and trustworthiness. The racial wealth gap continues to grow, and land within the Black community is dissipating with each generation, as only 30% of Black people have an estate plan to strategically grow and pass wealth to the next generation. Creating a legacy through estate planning discusses the strategies and opportunities to build. Amy's goal is to build strong communities, one family at a time. It is my pleasure to present to you the speaker for this evening's Will and Estate Planning presentation, Ms. Amy Griffin. Amy, please come and share your knowledge with the people.
Thank you so much, Herman. I am so honored. And I don't take lightly the opportunity to stand before you. Actually, I'm sitting before you, but I don't take it lightly. Can I have capacity to share my screen?
Yes, Amy, on your computer, can you just hit share screen?
Yeah, it says host disabled participant screen sharing.
Okay. Okay, you're now the host. You can share.
Okay. With that being said, I always try to apologize in advance for my technological challenges that I will evidence. I will evidence them, even though I do this all of the time, but it's not like I do it well.
We can see it now.
We can see it.
Okay, all right. So
Jesus, Mama, Jesus.
Okay.
Excuse me, someone can we all mute our phones and our computers? Thank you.
Again, I thank you all for having me. I thank you for helping us achieve our goals to help educate folk, right? And so I start off with a picture of the attorneys of the Griffin firm. We are an almost all Black women firm. We have a Peruvian woman, but principally we're a Black women firm that we are committed to, as Herman shared with you, our core values are faith, excellence, relationship, service, and trustworthiness. I bet we're one of the only law firms in the world that have a prayer request on our website. And we have prayer every Wednesday morning as a corporate prayer on Facebook. So we have prayer. So that's who we are, right? When I start off, we talk about legacy and what does that mean to folks? Because it has different meanings for different people. I start off with trying to make it personal. Herman and those folks were relatively professional. I'm gonna be real. I can tell you who I am, what I am, and why it means to me, so you understand my perspective. I start off with the two children that God blessed me to give birth to, and the two children I had that have survived, and my two grandchildren, my son's children. And that's an important part of how I plan. It's an important part of how I think of life. And I also encourage people to stop thinking about their children as solely their biological children, because we have community children, we have spiritual children. We all have people that we impact in our world, irrespective of who we've actually physically, biologically given birth to. The second part of my legacy is in thinking about how I move through life is creating the life and legacy counselors. And I created it as a team because I know that tomorrow's not promised to me. And so the people that we serve, that we have a relationship and a responsibility to, irrespective of the fact if I'm in Orlando or serving in the DC metro area, that there are people who that will live beyond me. I do want the world to mourn when I pass away, but knowing that I'm going to that greater place because I'm been saved. But anyway, knowing that my firm is built, planned with a purpose on that it goes on beyond me so that we can be very thoughtful. I am a member, an active member of Kingdom Fellowship AME Church, which is one of the newest AMEs in the DMV with Pastor Watley, Matthew L. Watley as the pastor. But I know that charity is an important part of building a legacy. Giving is as significant as being, right, and doing. We know that's who we are, right? And then fourthly, part of my legacy is the creation of the Association of Black Estate Planning Professionals. And I know as a daughter of civil rights people that I have to give back. So when I founded the Association of Black Estate Planning Professionals with the mission to bridge the racial wealth gap, I know that I need to give. That's part of the role that I serve in the world. And clearly Hermand is truly a brother in the spirit, because his initiative is comparable to our deeds of faith, working through churches to invert the statistic to bridge the racial wealth gap. So I'll talk a little bit more about the deeds of faith, but what we know is 50% of adults in America pass away without a will, and 70% of Black folks pass away without a will. Why that's important? Why that's important is because if you don't decide who your stuff is going to, the state's going to decide for you. And I always say that if we think about how that is impactful, when we look at when we don't plan, our assets get lost. I think Herman mentioned that the land mass is lost in the Black community. By not having an estate plan, what is the most consistent loss in our community is land. In Philly, where the median value in 2019 was $183,000 for a house. If we increased from 30% to 70%, that's 2,000 families, just 2,000 families. The legacy impact in Philadelphia would be $366 million. So if we look at, I'm in DC, so it's $1.2 trillion. Look at that impact, because we lose so much stuff. So much of our stuff, so much of the investments that our family has worked to create, when we don't take the time, energy, and commitment to build. So we're going to talk a little bit about one of my favorite scriptures, because I think every lawyer's favorite scripture is, the Lord answered, write the vision and make it plain upon tablets, so that he may run who reads it. Now, I think that says a few things. First and foremost, that we're supposed to have a vision, because he said, write the vision, not like if you have a vision, but write the vision and make it plain on tablets so he may run who reads it, which means that my vision is not supposed to stop with me. My vision is supposed to be bigger than me, and so that it's supposed to carry on. So as a lawyer, I know that if it ain't written, it ain't so. So I encourage people to write the vision and make it plain. So I have had, unfortunately, I don't have to, I can tell you stories about stuff that's happened to me, because nobody ever calls me to say I'm having the best day ever, unless you're related. More often than that, they call me as a lawyer because something gone wrong. I had a mom who had 3 kids, and she was very thoughtful about building her legacy. She was very thoughtful about creating inheritance, each of her children. She had 3 houses. And so she wanted to give one to each kid, and each kid knew that. And I remember she reached out to me, and she was actually bedridden when she reached out to me. And she said, this was my plan. I want to give my 3 houses to 3 kids. My daughter, who's the youngest, only works part-time. So she has a little struggle, but I transferred the oldest to my first house to the oldest son, and the other 2 are to go to my other 2 children. She passed away before those other 2 properties were transferred. And as a result, one might think, because we all knew what her intent was, that wasn't the case. The oldest son said, because she does not have a will, I get to get my intestate share, a third of each of the other two houses. So we know that just because it's our intent, it doesn't mean that people do what they're supposed to do, right? And what we know is if it's not written, it's not enforceable. So I encourage you to be very thoughtful, not about who your children should be, but who they really are. Greed and grief are the two G's that we need to really be thoughtful and prayerful about. So what we know is if you do not have an estate plan, the government's got one for you. They've written out a formula to determine who gets what and how they get it. So if you pass away, and a lot of people think, oh, the stuff's gonna go to my wife or my husband. No, that's not necessarily the case. It may go to your house, to your spouse. A portion of it will go to your spouse if you have kids. A portion of it will go to your spouse if you don't have kids, but if you also have a parent. And that's, you know, and that is, let me just all be clear. I love being Black. I love being Black, but we don't always get bogged down with the law. We don't worry about making sure that marriage license says we really are married all the time. And so that spouse that we've sort of lived with isn't necessarily always our spouse. That spouse who left and y'all didn't need to bother to go to the court to get that divorce decree is still your spouse. And the children who left and you didn't necessarily, you haven't seen anywhere for years, has not been disinherited. And the children that you've adopted are not adopted if you didn't go through the courts. So I encourage people that while I love the fact that we just let love lead us, we need to know that if we don't write it out, the court is not going to recognize us. And what we also need to know is that
I'm on a Zoom call. What you say now, Kiki?
Okay, if you can mute your phone, please. If you can mute your phone, please.
Okay, so, and you got the cutlery, the plates, the.
I can do that.
Excuse me, right. Patrice. Excuse me, Patrice.
I just did. I got her, I think. All right. So what we, I guess I didn't.
So I'm going to ask Sister Carol if you can mute Patrice, please. That would be great.
You're so sweet, darling. Greatly appreciate it. All right, Keon, because Keona's at Walmart not getting food, so I'll just go and
Sister
get
Carol.
the fruit dip.
Yes, I'm trying to mute her now.
I got her.
Okay.
I think I got her.
Okay, yes, you did. Thank you.
Okay, thanks. So, whoops, I got push happy. Okay, so what you need to know that we don't really know because they deceive us on TV is what is the probate process? The probate process, we think that if I have a will and I pass away, the lawyer calls my family into a room, they read the will, and then they can give away my stuff. Well, that's all TV. When people call me to say, I want to have a reading of the will, I want to say, can't you read? Because my reading and your reading is no different, right? But there are sometimes who people want me to read the will because they want me to be the bearer of bad news. And I'm okay with that. But the reading, the will does not, it directs the probate process. The probate process, however, goes through the courts. You take the will to the court. The court, therefore, first says, okay, in Pennsylvania, Philly is one of the most expensive places to die. Now, what happens is they take the will, they send a notice to the court that says, Amy died, does she owe you any money? They put it in the newspaper. Does Amy owe you any money? And Sears and Roebuck, American Express, student loans, Freddie Mac comes forward to say, Amy owes me money. And but in the newspaper, there's a time frame that says when I have to come forward, when the creditors has to come forward to say that there is money owed, right? And they also get to say in my will or the recording, it says Amy died, does she owe you money? And Tiffany is going to be appointed as the executor of the estate. Do you have any objections to Tiffany being appointed, right? So, and as well as if the will does not say that we avoid a bond, that means you have to take an insurance policy. The executor has to take out an insurance policy to make sure that indeed Tiffany does the right thing. And so based on her credit and the value of the state is how much is paid for the bond. But the greatest scam ever is that the court requires that you pay court fees based on the amount of assets that you have. So the more money that you have, the more assets that you have. That includes your house, your car, your personal property, your bank accounts that go through the probate process. You pay the court based on that amount. The biggest scam ever. But you got, unless you do a plan accordingly, you got to pay it, right? So once you pay the court fees, once they put the notice in the paper to say, Amy died and does she owe you money? Once Sears and Roebuck, JCPenney and American Express gets paid, then the assets can be distributed to my estate. Now, mind you, based on, if I have a will, it's based on my will. Or if I don't have a will, it's based on the formula that the state has created. Now, you cannot give your spouse $1 and think you're all right. You cannot disown your spouse unless, of course, you have a prenup or you live in Georgia. Because if you write in your will that I'm giving my spouse $1, your spouse can say, if your spouse says fine, then it's fine. However, if your spouse says, oh, no, I want the elective share, that means your spouse wants the share that would be the formula based on what would happen if I had no will at all. All right? So I encourage people to be thoughtful about, especially this is really more an issue if you have a blended family, right? More often than not, if you don't have a blended family, you sort of want things to go the same way. And I say that we need to be, we're okay with that if we're okay with that. Each one of us have our own little circumstances, situations that we have in our family. I'm not trying to judge, all right? So, but knowing that the formula applies, if the formula does not apply to you in the way that you want it to, then you want to make different arrangements. And if you don't want your family to have to go through the probate process of waiting the 2 years that typically it takes to get all the way through, then you need to be thoughtful about how do we avoid probate. And I typically encourage people to avoid probate. Most people say, many people, well, most in the Black community, because we say 70% don't have it, is I don't need an estate plan. But I tell you, the estate plan handles 3 questions. We know what happens when you die. And sometimes we don't really want to deal with that. So we don't want to talk about that. But what really, and I've had people say it doesn't matter because I'll be dead, so I don't care. But what matters is if I can't take care of myself, if I can't make decisions for myself, who will make them for me? You want to typically determine who's going to make those decisions. Those of us who saw Diary of a Mad Black Woman know that, but we're not judged. Then, but I think the one that's the most empowering is what's your legacy? How is it that you want to leave the folks that you love behind? A lot of times we don't want to do this for ourselves, but those people that we care about, we get to create a legacy built for those folks who come after us, right? Because again, we get to be thoughtful and planful and create an impact for them, right? And many of us are in the sandwich generation where we have parents as well as children, and in my case, grandchildren, that we need to be thoughtful about. And I'm always very mindful, and I tell people this is my bias all the time. How do we protect the land? Real property is sometimes the greatest asset that we pass on to our family members, right? And it has I always say out there, real estate appreciates, money evaporates. So how do we be thoughtful about passing it on? If we go through the probate process, and again, remember I said the first thing they do is they put a notice in the paper and they say, who did Amy owe you any money? If I was sick before I passed away, I was really good about paying all my credit card bills, but I was sick and was therefore in the hospital. Those hospital bills will come up and say, oh yes, Amy owes money for that hospital bill. if indeed that happens and the only asset that I have is the house would need to be sold in order to take care of that estate, that probate, right? So I encourage people, let's plan to how do we avoid that? One, again, those things that go through probate are those things that are solely in your name, that don't have a beneficiary, right? If I have a house that's jointly held with my spouse, and it will go to my spouse when I pass away. So that doesn't go through probate. But when he passes away, it could, right? So we need to be thinking about how do we plan for that? And again, as I was saying earlier, I am relatively newly married. I have been married 2 years. I love my husband, but we're a blended family. And I don't say but and I'm I say to people, I'm third generation blended family. So if I were to predecease my husband and he received all of our joint assets, when he passed away, my children would have been disinherited because it would have gone to his children based on the formula if we had no plan, right? So, but what we need to be thinking about when you're not able to make a decision for yourself. So often I encourage people to make the decision about who's going to make a decision about who can manage your assets when you're unable to. If you're sick or in the hospital, don't just appoint Pookie because Pookie is your firstborn son. Pookie, if he's never managed his own money, if he's always had to borrow at the end of the month, he's not going to rise up. People often say to me, oh, he's going to step up when I need him to. No, he's not. Be real about who they are. When people show you who they are, believe them. Appoint someone who has the assets that you have plus, who has the integrity that you have, and can manage your assets accordingly. If he doesn't balance his own checkbook, he's not going to start by balancing yours. So I encourage people to be thinking about how do we plan accordingly. And who will make decisions for you when you can't? Jean-Pierre was a soccer player, and young soccer player in his 20s, and had to have a knee replacement surgery. The anesthesiologist, there was medical malpractice, and he was in a coma for 39 years. And his wife stood by his side for 39 years, at which point he passed away. Terry Schiavo in Florida, he was in Paris. Terry Schiavo was in Florida, where I am now, and she had an accident, hit her head, and was in a persistent vegetative state. She was able to breathe independently, but she couldn't eat or drink on her own. Her husband said that she would not want to live that way. Her mother said she would want to live any way that she could live. And it went to the Florida Supreme Court, at which point, after 15 years of living in a persistent vegetative state, the Florida Supreme Court said that she is able to be allowed to pass away. So I know that none of us would want to have our family at odds like that. We know that we've got to make a decision to be able to be a blessing for them, right? And the other thing that I want us to be mindful of and on alert for, and I am the co-leads of my senior ministry at my church, and we talk about this a lot. There is a lot of people who are looking to take advantage of our seniors and our vulnerable people, right? And so we need to be thoughtful about how do we take extra steps to look at and plan for them. Now, when I've had people who come up to me and say, I have had this person who all of a sudden wants to become my power of attorney. I have grandchildren who all of a sudden show up after 20 years for grandmoms, and they're their best friends all of a sudden, but they're making decisions that are not in their best interest. So I encourage people to be ever vigilant about how to create checks and balances of support for our vulnerable people, because truly, I don't know if there's an increase or just an increase in what we can see and find that people are taking advantage of of our elderly, of our vulnerable people. And so we need to be thinking about how do we protect that by having the power of attorney in place early. Now, I say we should have our first estate plan at the age of 18. And I'll share with you that I came up with that, not because I'm fatalistic or anything, but my baby girl was a sophomore at Temple University, and she was in a car accident and was in the hospital. And I was living in Massachusetts. And I got this text message from her girlfriend saying Courtney was in a car accident and in the hospital. I called the hospital, as every mom would do. And the nurse said to me, Courtney's over 18. I can't give you any information. Now, God was with the both of us because I was trying to figure out how to reach through the phone to say, tell me if my baby girl's okay. She said, I can't give you any specific information, but I will tell you that she's okay, right? But at the age of 18, we have, the right to privacy. And as such, they cannot just give us information about someone, especially health information. So we've got to make the decision at becoming 18, who do we want to have access to that information, right? There is a movie on Netflix called I Care a Lot. And that speaks to if you don't have someone appointed to serve on your behalf, then the court will take the steps to appoint a guardian. A guardian is a legal, the court's involvement to make sure that someone is appointed to serve, to represent your financial matters. Now, I don't have any problems with lawyers having that responsibility and lawyers getting paid for that, because indeed we are paid for our time. But what happens is if you have someone who doesn't necessarily love you, but is just paid to take care of you, what often happens is the dwindling of your assets. I had a matter when there was a attorney who was appointed and he was well within his rights to do it. But what happened was his hourly rate was $400 an hour, and he went to the bank, it took him an hour, sat at the bank to open a bank account for the ward, the person who was disabled, and another hour to get back to his office. For $1,200, he was paid to open a bank account. So if you realize that every activity that the guardian pursues on behalf of the disabled person, they get paid for, realizing that indeed does dwindle down your assets. So I encourage people to not wait to have a court person appointed, because there's a lot of activities that the court requires that person would be paid for and take from your ability to be cared for. So I encourage people, have the power of attorney in place so that you indeed are not paying someone who doesn't care about you to care for you. The 3 foundational documents that everybody should have at the age of 18, first and foremost, is that power of attorney. And that manages your makes decisions regarding your financial assets, right? Who's going to pay those bills while you're unable to do that? And I tell people all the time, I'm a professional pessimist. So I want you to identify not just that person, but a backup to that person. And oftentimes a backup to that backup. And I often want to put a checks and balance that says, that identifies if it's up to a certain amount, I want a co-signer, because we want to make sure that they're making decisions that are prudent in your best interest. While the law requires it, we want to make sure that it's not a haphazard experience, that they are planning accordingly. So the power of attorney is giving someone to act on your behalf for business and financial matters. And that's as broad or as specific as you want it to be. And it's valid up until the date of death or until you change it, right? And you can change it as long as you are confident to do so. The second document, actually in our firm, it's a set of documents. It's 4. First part being HIPAA waiver. When you go to the doctor and they say that there is a matter of, right to privacy. So who do you want to be able to have conversations with your medical professionals, right? And be able to look at your medical records. They may not be able to make any decisions for you, but they can have conversations with your professionals, and that's what the HIPAA waiver does. The second one is their proxy, appointing someone to indeed be the one who can speak for you when you can't speak for yourself, right? Who do you want to be able to say, yes, I want to have life-sustaining treatment, being on a ventilator, or being having tube feedings, all of that stuff. You get to identify who do you want to speak for that. But most importantly, there's an advanced directive living will that says that these are the conditions that I want. These are the criteria that I want in place. Now, think that's so important because I've had too many siblings call me and say, I'm not speaking to my siblings anymore because they killed my mother, they killed my father, right? Because there was no direction in place for guidelines in place, so they didn't know what to do. So if we can help provide that information, then we can indeed help reduce some of the anxiety and the stress that is provided to the children or the loved ones, whoever it is. And I will say to you that you don't necessarily want your children to make that decision, or your spouse, because especially if there's a blended family, there can be guilt associated afterwards. So we need to be really thoughtful about who is it that we want to appoint, knowing that number one, that they will make decisions consistent with what I want, and number two, that they have the emotional strength to do that, right? And then that third document is the last will and testament, as we discussed, that directs the probate process. Excuse me. Oops, went the wrong way. So I also encourage people to be very thoughtful about, again, that's long-term strategic planning. We all want to be able to live that long life. And my goal, heart desire, is to make sure I've lived 147 years and then I go bike riding that day and come home and go to sleep. But if not, who is the one who's going to make the plan for us? Who's going to be able to make the decisions with us, right? Do we want to use up all of our assets in such a way that our children's children don't receive anything? I encourage people to be very thoughtful about it, because again, another favorite scripture, of course, I just put my favorite scriptures in here. A good person leaves an inheritance for their children's children. And I say that because so often we just think about our children, or we plan for our children. And again, if we go through the probate process, it's going to care for our children and not beyond. So I encourage you to be thinking about, scripture says that's not good enough to leave it just to our children. But scripture says we have to leave it to our children's children. And therefore, we need to plan accordingly. And being thoughtful about what does that mean? Because sometimes leaving a significant amount of money to your grandchildren or anybody is a negative impact if they have problems with gambling, if they have problems with substance abuse or mental illness or special needs. We need to be thinking about how do we protect our children and our children's children, being biological, spiritual, emotional, or community children, for their best interest, being mindful of that and planning accordingly. We talked about the probate process, and I encourage everybody to avoid it, right? Avoid probate. And how to do that, the easiest way is to make sure that all of your bank accounts have a beneficiary, right? So that when you pass away, they don't have to go through the probate process to change who it is. Who it belongs to, who it goes to, because then it would automatically go to whomever it's determined. And I always encourage people to remember who you set up for your beneficiaries, because I have a husband that I am praying did not remember to change me from his. But we need to be all thoughtful about how do we make sure that it doesn't have to go through probate, that it goes to who we want to, and we want to make sure it's in their best interest. One of the benefits that we also have is for our real property is creating a transfer on death deed. That way your house can go to the next person. You own it during your lifetime, but when you pass away, it's transferred to whomever you choose it to go to. And that would be, again, avoiding probate. One of the things that I see far too often, most of us have heard of heir property. When, let's say, great grandma owned a house and she had 4 kids, but grandma stayed in the house after. great grandma passed away, and mom moved in the house, even though, and her other 5 siblings did not. But she stayed in the house. They did not probate. The house is still in great grandma's name. And when mom passed away, I lived in the house, and I have 4 siblings. So of all of my cousins, there are like 30 people who would have assets, have an interest in this house. That's called heir property. Because I own it with 30 other people in essence, that means I can't really do anything with it. I can't get the roof fixed because you have to have all the owners agree. You know, I can pay the taxes, but I can't do major modifications. As a result, we as a Black community lose a lot of our property, because therefore, if you can't do anything to it, when it falls into disarray, and many times, and then there are taxes that people choose to stop paying because they can't do anything to it, and they can't even, because I'm uninhabitable, and we lose property. There's so much land in the South that people have inherited and lost as a result of heir property. So we are very thoughtful about how do we protect that. I encourage people, there was a family that came to me, and there were 6 people that we would have to probate to make sure that the asset, that the real property was able to be transferred to anybody, so that, you know, there was timber on the land that could have been could have been farmed, but nobody could approve it because nobody had the legal authority to do it. So we need to be thinking about how do we protect it. But I encourage people to be doing that transfer on death deed, or the other way is a life estate deed, because that avoids probate as well. And what we call is with and without power is our way to manage it. One of the things that I always try to remember to tell people not to do is, because one of the ways that we think about avoiding probate for our real property is by putting our kids' name on the deed with us. If you hear me say nothing else, hear me say, don't do that typically, right? 9 times out of 10, I'm gonna say, don't do that, all right? All right, moving on. So there are the tools for avoiding probate. Again, first and foremost is to avoid the probate by having beneficiaries on all of your accounts. The other ways, and your property is transferring your property at death. Another way is by having a trust. A trust does 2 things. One of which is it gathers all of your stuff. It maintains a level of privacy. And so your assets can pass on to your next generation and the generation after that by being held in this trust, as opposed to and it's a private document, as opposed to the will, which is, remember I mentioned, I take the will to the court, and the court puts it online so anybody anywhere can see my will, and anybody can see who got what, where, when, and how, and what stuff I had. But the trust is a private document that avoids the probate process. It's a set of rules, and basically it's contract law that determines what happens to my stuff when I die. There are 2 major categories of trust. The first one is a revocable when I'm being highbrow. Living trust. That means I can make changes every other day. And I remind my children that I can make changes every other day about who gets what, where, when, and how. And we think about the revocable living trust as a legacy building trust. For me, for example, my life insurance, the beneficiary is my trust. And so after my funeral and stuff are paid, then assets can be invested. And so distributions can be made based on the rules that I provided. My children are old, so they don't need a whole bunch of stuff, but my grandchildren have to, I get to pay for some of their college, as well as I get to help them buy a house. I tell grandparents all of the time, one of the best gifts that you can give to your grandchildren upon birth, and important when I say upon birth, because it's the cheapest ever. If you can get your grandchild a whole life insurance policy when they are born, let me tell you, I'm going to use, lawyers aren't the best mathematicians, so I'm going to use this as a great example. If you create for your grandchildren a whole life insurance policy, I'm going to say $1 million, right? And so and we can do a custom so that they only pay for let's say 15 years and your trust pays for it. Your trust owns it. When they get to college, they can borrow some of it for college. And I am a bit controlling. So I say that they have to satisfactorily progress from that semester to the next. They're not hanging out on my money, right? But they can satisfactorily progress through for semester to semester for me to pay for it through the trust, right? We don't expect them to ever pay that money back. But let's say, because I'm making my numbers easy, that it's $400,000 they borrowed from their policy that's owned by the trust. Let's say when they got older and they're ready to buy a house, they borrow from the trust $100,000 from that life insurance policy to say that they're borrowing $100,000 as a down payment. Now, mind you, I'm not buying them a house. I'm giving them the down payment because therefore they have to have good credit and they have to have a job to be qualified for that mortgage, right? Because we want them we want to help them, but we don't want to take care of them. So mind you, that life insurance policy is in my trust. So it doesn't show off on their FAFSA because my trust owns it. So that's one of the things that, so they borrowed $500,000 that they don't pay back. When they pass away, remember we bought $1 million life insurance policy, $500,000 goes back into the trust for multiple generations. That's one of the ways in which we can create multi-generational wealth without thinking about it. We know that we are creating for our children and our children's children and our children's 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 children by strategically planning, right? And that's part of the revocable trust that we get to make changes on. It's like, as life circumstances change, I can make a change. And a revocable trust is an extension of me. It uses my social security number as an identifier.